look into the next segment, page number 196, segment number 28, duty drawback and refund. What is duty drawback? Nothing but refund of customs duty. The other name for refund of customs duty is duty drawback. But duty drawback we will not get in all cases. Only in 3 cases we will get duty drawback. Number 1, remember this example. You are importing a robot from Japan. You display that robot in an exhibition, and once the exhibition is over, you are exporting that robot back. At the time of import of robot, you pay the customs duty. Whatever you have exported is without use. So you will get the refund of the customs duty paid. That is situation number 1. What happens in this situation? Imported goods exported as such without use. Then duty drawback will be payable under 74 subsection 1. Second situation, you imported racing cars for conducting a F1 race in India. After completing the race, those cars are exported. What is the difference in this example to previous example? In this example, you are exporting it after use. So, imported goods exported as such after use. Then you will get duty drawback under 74 subsection 2. Third situation, you remember, you imported, so this integrated circuit, glass panels, etc. and you made laptops, and those laptops got exported. You imported the raw material required for making the laptops, you made the laptops, and those laptops are exported. So then you will get duty drawback. What is the difference in this situation to the previous? In the previous, what you imported is what you have exported, but in this case, what you imported, you converted into a different product and you are exporting. So imported goods exported after manufacture or process, you will get duty drawback under section 75. These are the 3 situations where we will get duty drawback. Number 1, imported goods exported as such without use. Number 2, imported goods exported as such after use. This is 74, subsection 1 and subsection 2. Then 75, imported goods used in manufacture of finished goods which are then exported. That is 75. Now, what are the provisions that we have in 74 and 75 we will see. But you need to know here that in case of 74, you will get a duty drawback, and that covers IGST paid on import also. For example, in case of 74 subsection 1, the duty drawback is 98% of customs duty paid on import. Say at the time of import, you are paying 1 lakh as basic customs duty. Let's assume 10 lakhs as the value of the goods. 1 lakh you paid as basic customs duty. Social welfare surcharge you are paying 10,000, and IGST you are paying some 1,33,000 you are paying as IGST. Now the total customs duty is what? So 2,43,000 will be the total customs duty. In this total customs duty you will get 98%. So you will not get 98% of 1 lakh or 1 lakh 10. You will get 98% of entire 2,43,000. Now in this place, what is your answer? Can we take ITC with respect to this 1,33,000? No. Why we should not take ITC with respect to 1,33,000? Already we are claiming duty drawback on that. Generally on import of goods, IGST paid can be taken as ITC. But in this case, you cannot take ITC with respect to that because you are claiming the refund with respect to it. Whereas this is under 74. Whereas in case of 75, you will get a duty drawback irrespective of the customs duty paid on import. A percentage of FOB value of export you will get as a duty drawback. See under 75 how you will get duty drawback. All industry rate means whatever is your FOB value of export, on that FOB value 1% or 2% you will get as refund. Okay. Say using this 10 lakhs worth of goods, you have made some export, and that export is 20 lakhs, and on the 20 lakhs you are getting a duty drawback under section 75. Okay, imported goods converted into finished goods and you are exporting that. Now automatically you will get benefit under which section? 75. And the duty drawback is 2% of FOB. Means how much duty drawback you will be getting? 2% of 20 lakhs is what? 40,000. So you will get a duty drawback of 40,000. this 40,000 duty drawback is to cover basic customs duty and social welfare surcharge only, but not IGST. Which means, can the IGST paid on import be still taken as credit? Yes. And can you get it as a refund under GST? Yes. So that is what I have given here. Input tax credit versus duty drawback. In case of 74, duty drawbacks covers IGST and GST compensations is paid on import. Therefore, ITC cannot be availed with respect to the same. Why? Because in case of 74, we are getting the duty drawback how much? Which is 98% of customs duty paid including IGST. So you should not take ITC. Is it clear? Whereas in case of 75, duty drawback covers only customs duty but not IGST, GST compensations, which means whatever duty drawback that you get here 40,000 is just to cover this 1,10,000 but not this 1,33,000. So ITC can be availed with respect to the same, and even we can claim the refund of ITC upon export. Understood? So this is a key point which will be tested in exam. Then section 74, when is it applicable? Imported goods exported as such. What is the time limit within which it should be exported? The imported goods should be exported within 2 years from the date of payment of import duty. Superb point. It is not from the date of import. From the date of payment of import duty means you imported it, you kept it in the warehouse for 6 months, and thereafter you cleared for upon payment of duty. Now the 2 years should be computed from the date of deposit in warehouse or date of clearance from warehouse. When are you paying duty? At the time of clearance, which means the 2 years should be computed from the date of payment of duty. That is whenever you paid the duty and cleared the goods from the warehouse. So 2 years from the date of payment of import duty, and it can be extended for a further period as approved by CBIC. So what is the meaning of exported? Means the let export order date. You can see the footnote. Export goods shall be deemed to be entered for export on the date of let export order. And what is the meaning of payment of import duty? Not the date of import. As and when you paid the duty, that date should be taken. Then look into the second point. What is the rates of duty drawback? In case of 74 subsection 1. When 74 subsection 1 is applicable? If imported goods are exported as such without use, how much duty drawback you will be getting? 98% of customs duty paid, which means literally the loss to you is 2%. Whereas in case of 74 subsection 2, duty drawback is at reduced rates. What is that reduced rates? You can see in page number 198. Duty drawback rates as per 74 subsection 2 depends upon whether it is motor vehicle imported by any person or other goods imported by individual for personal use or other cases. Okay. Suppose if it is motor vehicles imported by any person or goods imported by an individual for personal use, depending upon the period of usage, we need to do the depreciation, and remaining amount we will get as duty drawback. What is this depreciation? Same as the depreciation that we learnt in import of goods at concessional rate of duty. 4%, 3%, 2.5%, 2% for every quarter or part thereof. But the difference is, there it is first year, second and third year, fourth and fifth year thereafter. But here it is first year, second year, third year, fourth year. So for every quarter or part thereof in the first year, 4%. For every quarter or part thereof in the second year, 3%. For every quarter or part thereof in the third year, 2.5. For every quarter or part thereof in the fourth year, 2%. You reduce it, and remaining amount you will get as duty drawback. Okay. For example, we used exactly for 2 years, and thereafter, we have exported it. Then in that case, how much duty drawback we will get? So we will get, for every quarter or part thereof in the first year, how much we need to reduce? 4. So 4 into 4, 16%. Then for second year it will be 3. 3 into 4, 12. So 16 plus 12, 28%. So 28 if it goes, so the remaining, so that is 72%, we will get as duty drawback. Are you understanding this? But actually the time limit is only 2 years. The time limit for export is only 2 years. But here they have given third year, fourth year. How is it possible? They're telling time frame beyond 2 years, CBIC should approve, because if you see here 2 years and it can be extended for a further period na, so therefore they need to give approval, but in total it cannot go beyond 4 years. Suppose exactly 4 years you have used, how much you will get as duty drawback? First year 16%, second year 12%, third year it will be 2.5 into 4, 10%, and then it will be 8%. So count 16 plus 12 plus 10 plus 8. How much? 46% will be reduced. So remaining 54% we will get as duty drawback. After 4 years, if you export, 0. You will not get any duty drawback because the maximum period is only 4 years. This is applicable in which case? This is applicable in case of motor vehicles imported by any person and goods imported by individual for personal purpose. In other cases, what is the duty drawback? So we need to increase the period by 3 months. So 0 to 3, 3 to 6, 6 to 9, like that, 3 months you need to increase. And it starts at 95% and it will come down by 10% for the first 3 years, thereafter the first 3 periods, and thereafter it will come down by 5%. So therefore 95, 85, 75, and thereafter it will be 70, 65 and 60. So after 18 months you will not get any duty drawback. Can you remember this schedule here? Because in exam they will not give this, you have to remember. In exam they will not give these rates and all, you should remember this. So this is the rates, duty drawback at reduced rates for the purpose of amount of duty drawback under section 74 subsection 2. That is this duty drawback at reduced rates. Then next third point, you see mandatory prohibition. In few cases you will not get duty drawback. What are those cases? If the amount of duty drawback is less than 50. So less than 50 rupees and all, they will not give here. So they don't know currency less than 50. Okay. And market price of the export goods is less than the duty drawback. What is this? You imported a iPhone say 10, iPhone 10 you imported, okay, and you did not use at all, you just kept it safely, and now it is iPhone 15, you purchased for 1 lakh, what, iPhone 10, you did not use at all, you kept it safely, and now you are selling it, okay, at what price you will be able to sell? 20,000, that too maximum, okay. So you have not used it. Why, sir? Then the price has come down because of the efflux of time. The technology improvements will happen and no one will be willing to purchase the old models. Like that, here what happened? You imported the goods for 1 lakh. At the time of import, you paid a customs duty 30,000 and you exported as such without use after 18 months. But the market value of these goods came down to 20,000. You understood? Then in that case, what is the duty drawback under 74 subsection 1? 98% of customs duty paid. What is the 98% of customs duty paid? 30,000 into 98%, that is 29,400. But what is its market value? Only 20,000. So you will not get duty drawback. Why you will not get duty drawback? Because the market value of those export goods is less than the amount of duty drawback. So you will not get. Also, duty drawback under 74 subsection 2. So not 74 subsection 1. So these 2 points are common for both 74. This 50 rupees point as well as market price of the export goods is less than duty drawback is common for 74, both subsections. Whereas these goods, if you are importing and exporting it after use, because see the section they gave, 74 subsection 2, then you will not get duty drawback. What are those goods? Wearing apparel. So you import some garments, okay. So lot of people, what they do, they see the celebrities and all, and foreign celebrities, they are wearing some good dresses and all. So we will be importing it. After importing it, online shopping versus reality, a big difference will be there, and it may not fit to us, and we will be sending it back. Whether we will get duty drawback? Yes. We are sending it back immediately without use. We will get. So the restriction is when, if you are using it, wearing it for a function, walking in the red carpet, and thereafter you are sending it back, you will not get any duty drawback because it is exported after use. Then tea chest. Tea chest refer to wooden boxes to preserve the tea. So actually foreign countries will not allow us to export in cartons, plastic bags or any packets except the wooden crates, because the aroma of the tea leaves needs to be preserved. So that's why we will import the wooden crates. In that wooden crates we will pack the tea, and thereafter we will export the crates. Now in this case these tea chests are exported as such or after use? After use, so you will not get duty drawback. Then exposed cinematograph films. This is practically irrelevant in today's context. Previously we used to import the reels, and on that reels we do the recording, and once the movie is over complete, like 100 days 150 days is over, that reels we will be sending it back for washing, because we did not have the technology of washing the reels. So we will send it back for washing. Again we will re-import that reels for re-recording, like another film recording. So but now no one is using reels and all here, everyone going for UFO, satellite model and all. So practically it is irrelevant. Then unexposed photographic plates. Photographic plates, like we will be importing these X-ray plates and all, and we will be exporting it, and in that case also will not get duty drawback. So these are the 4 goods on which imported and exported after use you will not get the duty drawback. What are those 4 goods? Wearing apparel, tea chest, exposed cinematograph films, unexposed photographic plates. Then see this discretionary prohibition. What is this discretionary prohibition? Say you are importing goods from Germany and the value of those goods is 100 crores. On that 100 crores, the customs duty payable by you will be 30 crores. You have to pay 30 crores as customs duty. Now, you really don't want to pay that much amount as customs duty. What you can do, you will import from Germany, pay 30 crores as customs duty, and you send these goods as export to Pakistan, or you will send it to neighboring countries. So then it will come into India through land route. So the goods which got exported to the neighboring country, for example you are sending it to Pakistan, in Gujarat Kutch district is there. So in that Kutch easily land route is there which connect Pakistan to India. Through that land route the goods will enter. But in records the goods are exported to Pakistan. So imported goods exported, 98% of the customs duty paid. So that is what 30 crores into 98% we will get as a refund. You understood or not? So when people try to cheat this way, so they may not grant the duty drawback. Central government may notify that no duty drawback shall be admissible if any goods which post export are likely to be smuggled back into India. That's why for certain countries when we are selling, we will not get the duty drawback. That is this discretionary prohibition. Then next point you see, identity satisfaction. Exporter should prove that whatever exported goods and imported goods are same, because 74 is applicable when if the imported goods are exported as such either without use or after use. So exporter shall establish before proper officer that export are the one which were imported earlier. Then is there any application to be made for duty drawback? Yes, a separate duty drawback application is to be made. These are the points what we have in case of section 74. Now look into section 75. As per section 75, when 75 will be applicable? If imported goods are exported after manufacture, then no time limit. So which means you can export it after 5 years, 10 years also. But whenever you are exporting, you will get the duty drawback. Is it clear? You have imported some goods used in manufacture of finished goods which are exported. No time limit for export. But the moment you export, you will get duty drawback. How much is that duty drawback? We will get duty drawback based on FOB value of exports, a percentage of notified rates called as all industry rate. All industry rate is a notified rate of duty drawback, and that we will be getting, which is percentage of FOB value of export. Suppose we are exporting a product for which there is no all industry rate notified, then we will be making application for brand rate. So when brand rate will come into picture? When no all industry rate is fixed in the duty drawback schedule, then we will make application for brand rate. Then rule 7, special brand rate. That is, whenever we got duty drawback as per all industry rate and the benefit is less than 80% of the actual duty incidence or tax incidence, we can make application for brand rate, that is special brand rate. You can see this example. We are importing the goods for 10 lakhs. Using these imported goods, we are making the export of finished goods. How much is the duty drawback that we are getting? 2% of FOB, that is 40,000. This 40,000 covers what? 1,10,000. What is the percentage of 40,000 over 1,10,000? How much percentage? 36 point. So which is less than 80%, correct? Then can we go for special brand rate? Yes. When the duty drawback as per all industry rate is less than 80% of the tax incidence. What is the tax incidence that it covers under 75? Basic customs duty and social welfare surcharge. Then we can request the government stating that this 2% of FOB is very less. We need the extra amount, that is known as application for special brand rate. Then the government may increase this percentage, that is this. So whenever duty drawback fixed under all industry rate is less than 80% of the actual duties or tax incidence, then we can go for special brand rate. So what are the three rates that we have? All industry rate, brand rate and special brand rate. All industry rate will be for the notified goods. One brand rate, if there is no all industry rate notified, we can go for brand rate. When special brand rate, when the duty drawback as per all industry rate is less than 80% of the tax incidence, then we can make an application for special brand rate, that is this. And one important point you should remember that we should not go for all industry rate and then again go for special brand rate. So we need to do the computation before. So exporter shall apply for fixation of special brand rate. He is not entitled to claim all industry rate and then apply for special brand rate. It will not work that way. First, he need to compute and see, is all industry rate beneficial for him? No, it is less than 80%. Then he should not go for all industry rate. Directly he need to make application for special brand rate. Suppose if he claims all industry rate duty drawback, he can never go for special brand rate. Then till fixation of special brand rate, can he request for provisional amount duty drawback on provisional basis? That he can do, but he should never apply for all industry rate and then go for special brand rate. That is this point. Then look into the next mandatory prohibitions. Duty drawback less than 50 rupees, we will not get duty drawback. This is common. Then second point, market price of the export goods is less than duty drawback. When this scenario will arise, suppose if you inflate the value of the goods to get more duty drawback amount. Say value of export goods in Indian market is 30,000. The value of those goods is 30,000 only. But you declared as 4 lakhs. When you declare it as 4 lakhs means you are inflating. Why are you inflating? To get more duty drawback. And the duty drawback notified is 10% of FOB, that is 40,000. Okay. But will you get duty drawback in this case? No, because the market value of the goods is less than the amount of duty drawback. So duty drawback will not be allowed. Then rule 9, what is the maximum amount of duty drawback? 1/3 of the market price of the goods. 1/3 of the market price of the export goods is the maximum amount. What is the difference between above point and this point? Above point, if the market value is less than duty drawback, you will not get duty drawback. But if market value of the goods is more than duty drawback, you will get. But what is the maximum duty drawback that you will get? 1/3 of the market price. See this example. Export price is 1 lakh. Indian market price is 50,000. And all industry rate is 30% of FOB, that is 30,000. So is the market value of these goods more than duty drawback? Yes. So previous restriction will not come. But here, whether we get entire 30,000, no. The maximum duty drawback will be 1/3 of the market price, that is 50,000 into 1/3, 16,667. Then look into the next point, that is there should be a minimum value addition that needs to be achieved. That is your FOB value of export should be more than the CAF value of import. Because of exports, India should not be at loss. When India will be at gain, if the FOB value of export is greater than CIF value of import or at least equal, then India is at gain. Correct or not? Gain in what terms? There is no deficit balance of payments. So actually, if the FOB value of exports is less than the CIF value of import, means you are importing more and exporting less. So there will be deficit balance of payments. So that's why they have brought this condition. You will not get duty drawback when if the value of export goods is less than the value of imported materials used therein. And suppose if they have specified any value addition, if they are telling you need to achieve 10%, you need to achieve 15%, like that value addition, means your export value should be 15% more than the import value or 10% more than the import value. Say this, no duty drawback allowed if the value of export goods is not more than notified percentage of value of imported materials used. For example, say this, if value addition notified is 15% and FOB value of export is 1,15,000 and CIF value of import is 1 lakh. Are you getting the duty drawback or not? The notified value addition is 15%. FOB value of export 1,15,000. CIF value of import is 1 lakh. Will you get the duty drawback? No. Why you will not get the duty drawback in this case? See here. No duty drawback allowed if the value of export goods not more than, actually it should be more than, you have exactly achieved 15%. So 1 lakh plus 15%, 1,15,000, you will not get duty drawback. It should be more than 1,15,000. Therefore, duty drawback not available. Not available because you just achieved the value addition. It should be more than that. So then only you will get duty drawback. Then discretionary prohibition is common. So if the goods are likely to be smuggled back, they will not give duty drawback. Identity satisfaction not required. Why? Anyhow, what we are importing and what we are exporting is not the same. So due to that reason, identity satisfaction not required. And next, so is there any application that is to be made? No separate application in case of 75. At the time of export, we file a shipping bill. That shipping bill itself is treated as application. In that shipping bill, we will have an option to claim the duty drawback. If you select that option, we will get the duty drawback. So these are the differentiating points between 74 and 75. Now look into the interest computation in case of duty drawback. There are two interest provisions in duty drawback. Number one, you made a claim of duty drawback. What is the time limit within which they need to give you duty drawback amount? 1 month. Within 1 month, they need to give you duty drawback amount. Otherwise, they have to give you interest at what rate? Now, government is giving interest. What rate? 6%. From when? On expiry of 1 month till the date of duty drawback. Say this. If interest on duty drawback, if duty drawback not paid to claimant within 1 month from the claim date, then interest at the rate of 6% per annum from the date after expiry of 1 month till the date of payment of duty drawback is payable. Then you got the erroneous duty drawback. You got the erroneous duty drawback. Erroneous duty drawback means what? You should not get the duty drawback, but you claim the duty drawback. Now you have to pay along with interest. So what is the rate of interest? 15% per annum. From when? From the date you got the duty drawback till the date you are making the payment. Interest, if duty drawback erroneously claimed, shall be 15% per annum from the date of payment of duty drawback till the date of recovery of duty drawback, and this is the interest payable by exporter to government. Then we have refund under customs. So we have these 4 sections under which we will be getting the refund. So only 4 sections we have. In that 3 are the situations and 27A is with respect to the time limit. So look into the 3 situations where we will get the refund. Section 26 says, listen carefully, you are exporting the goods. At the time of export of goods, you paid the customs duty. And those goods are coming back, returns. You sold it to outside India, sales returns. Already we saw. At the time of export of goods, you paid customs duty. That person is returning the goods. So whatever customs duty you paid at the time of export, 100% customs duty paid on export, you will get as a refund. Is it clear? I sold goods here, I paid customs duty. Now the goods are returned, which means the customs duty I should get back as a refund. That is this. Refund of customs duty paid on export. If exported goods are imported within 1 year from the date of export. So what is the time limit within which it should be returned? 1 year. And application for refund should be made within 6 months from the order of home consumption with respect to import of goods. Then section 26A. What is this section 26A? Actually section 26A can be compared with 74 subsection 1. That is, you are importing goods and those imported goods you don't need. You are exporting it back. 100% of the customs duty paid on import you will get as refund. But in duty drawback, only 98%. But here how much you will get? 100% you will get. So compared to 74 subsection 1, 26A itself is better. But 26A is not applicable in all cases. Only when the imported goods are defectives, 26A will come. You got it? Normal imported goods exported will be 74 subsection 1. If imported goods are defective or not conforming to specifications, see this. Refund of customs duty paid on import. If such goods are defective or not conforming to the specifications, importer shall notify customs officer after clearance for home consumption, and such officer shall grant refund if such goods are exported or destroyed or abandoned within 30 days. Plus it can be extended for a period of 3 months. Actually what we can do, either we can export it back or we can relinquish the title or we can destroy these goods. In these 3 cases, we will get the refund of customs duty paid. How much refund we will get? 100%. What is the time limit within which this should be exported, destroyed, etc.? 30 days, and it can be extended for a further period of 3 months from the order of home consumption. And one important point is that you should not claim duty drawback to get refund under 26A. So duty drawback under 74 subsection 1 and section 26A are mutually exclusive, because in case of 74 subsection 1 also, if imported goods are defective or not conforming to specifications, you can export and you will get duty drawback. How much? 98% of customs duty paid. If you already claim there, again 26A you will not be able to get. And application for refund should be made within 6 months from the export or destruction or abandonment. Then section 27 is normal refund of customs duty. That is, by mistake we paid the customs duty in excess on account of wrong valuation or wrong classification. We paid by mistake wrong customs duty. Then we can get a refund of that. Refund of excess customs duty paid on import or export, and the application should be made within 1 year from relevant date, and the time limit of 1 year not applicable in case of duty paid under protest. Duty paid under protest means you are not accepting that you need to pay the duty, but just because of the sake of goods you paid it, you got the goods and then you go for appeal. That is known as duty paid under protest. In that case, if you win the appeal, so there is no time limit to make application and all. So even if you apply after 1 year, 2 years, 3 years, you should get that money. Then all these cases, once we make application for refund, what is the time limit within which the refund should be granted? 3 months. 3 months. In GST it will be 60 days. And in customs it will be 3 months. And if the refund not paid within the 3 months, then interest will be computed at the rate of 6% on expiry of the 3 months. Is it clear? So we need to make application for refund. If refund not granted within 3 months, interest will be payable at the rate of 6% after expiry of the 3 months. So these are the provisions that we have in duty drawback and refunds.